Welcome to the first episode of Art of Trading with Ichimoku. As you may know, Ichimoku clouds are an innovative trading strategy designed by a Japanese journalist called Goichi Hosoda in the late 30s. Ichimoku can give traders a broader perspective on price action, because traders usually fall into the trap of getting too close to price action and missing out the bigger picture. Ichimoku is more than just an indicator. It is an entire trading system that can give you everything you need, from finding potential support and resistance to trend identification, volatility, the proper places to put your stop loss, and a whole lot more. But before anything else, I need to introduce you to the key components of Ichimoku Trading System. Alright, the first component is called Tenkan. You may know it by names such as conversion line or fast line or whatever, but I really like the original name Tenkan, so I'm sticking by that. Tenkan is basically a modified version of a simple moving average, but it's a bit different. It is calculated by taking the highest high and the lowest low of the last 9 periods and dividing them by 2. That might sound complicated, but it's actually pretty easy. Let me show this in a chart so you can see what I mean. Here is the daily gold chart. We're gonna pinpoint the exact location of Tenkan for each candle plotted on the chart after forming this doji. For the first candle, we use the measure tool on the left and look back 8 candles. The reason is that this tool doesn't take into account the first candle. So if you want to count 9 candles, we have to move back 8 bars, right? Or if you want to count 26 candles to the future, we have to count 25 candles and so on. Next, we identify our 9-bar trading range with the rectangle tool. Then choose the highest high of the range as the upper side of the rectangle and the lowest low of the range as the lower side of the rectangle. Then we find the middle of these two levels and mark it with a dot. And we keep doing the same thing to find the exact location of Tenkan for each candle. Remember, I'm just doing this for educational purposes to show you how Tenkan is calculated. But as you know, any trading platform can automatically draw different Ichimoku lines in a fraction of a second. So it's not a big deal. Once you figure out where the dots are, the only thing you need to do is connect them with a line. If you double click on the indicator title and check the conversion line box, which as I mentioned earlier is the fancy name of Tenkan, you clearly see that Tenkan is just a line that connects these dots, right? Now let's compare the Tenkan with a regular simple moving average. As you can see, Tenkan is more sensitive to price movements than a simple moving average. Look how smooth a simple moving average is compared to Tenkan. But Tenkan looks more choppy since we measure it based on the midpoint of a range. I'm not going into more details about how we can use Tenkan, because first we have to be familiar with all the different components of Ichimoku Trading System. Keep in mind that all elements of Ichimoku are interdependent and must be used together to get the most accurate results. But if I wanted to mention just one advantage of Tenkan over simple moving averages, is that Tenkan can give you reasonable levels to trail your stop loss when you are in a profitable trade and want to make the most out of a trend. The next component of the Ichimoku trading system is called kijun, which is also known as the standard line or baseline. The formula to calculate the kijun is the same as Tenkan, but instead of using 9 periods, it uses 26 periods. So it is essentially calculated by taking the highest high and the lowest low of the last 26 periods and averaging them. By now you should have a good understanding of how we can plot kijun manually on the chart, because it follows the same logic as Tenkan, but I'll just walk through plotting it on the gold chart very quickly. After identifying our 26 period range, we take the highest high of the range as our upper side of the rectangle and the lowest low of the range as our lower side of the rectangle, and mark the midpoint with a dot. We continue the same process for the next 20 candles really fast. Now let's connect these dots with a line and make kijun. The next thing we want to do is compare kijun with the 26 period moving average to see if there are any significant differences between the two. As it's pretty clear from this chart, kijun is quite choppy compared to a 26 moving average. Notice how big and flat this chunk of kijun is, and compare it with the smoothness of the moving average. This means the average price hasn't changed for 26 periods. You can clearly see that we don't have such flatness in a moving average, but how does it benefit us? Well, there is a lot to say and hopefully we'll get to it in the future videos. However, just as a small tip, you can move your medium to long-term stop loss below these flat chunks of kijun. They can also act as potential support and resistances in the future. So now that you've become familiar with how Tenkan and kijun are calculated, keep in mind that we consider these lines the current elements of Ichimoku. So I refer to them as the heart of the whole Ichimoku trading system. The next component of Ichimoku is Kumo, and it's made up of two lines known as senkou A and senkou B. Calculating senkou A or span A involves using a different formula compared to Tenkan and kijun. It is basically the average of the current Tenkan and kijun, which is shifted 26 periods into the future. Now let's plot the senkou A on the chart to help us visualize the results. Alright, to simplify things, I've already drawn a straight line that spans 25 bars in length. I'm going to use this line to determine the precise position for the average of Tenkan and kijun when they are shifted 26 days forward. Let's repeat this process for the next 20 candles and see how it works. Once we have marked our dots on the chart, the next step is to connect them with the line to create the senkou A line. The second line of Kumo is known as senkou B or span B, and it's calculated by finding the average of the past 52 periods and then shifting it 26 periods ahead. When compared to other parts of the Ichimoku system, the calculation process for this particular component is more complex. However, the techniques we've already learned will be valuable in helping us comprehend it better. I won't dive into details about drawing points on the chart since we've already covered these steps, but if you followed the process so far, you should know how to do it, right? Now that you know how to draw senkou A and senkou B, you should remember that these two lines form the upper and lower boundaries of the Kumo, which is usually shaded. Kumo is often used to identify potential support and resistance areas. The thicker the cloud, the stronger these potential support and resistance levels are. It can also confirm a dominant trend. When senkou A is positioned above senkou B, the Kumo is displayed as green. Conversely, if senkou A is below senkou B, the cloud will be shown as red. Remember, the default colors of green and red for the Kumo are intentionally chosen to match the colors of bullish and bearish candles on the chart. However, you can change the colors whenever you want. This can be done by clicking on the Settings tab and selecting the color for each element. You can even adjust the transparency and thickness of the lines. Finally, you can save your settings and use them on other charts. The shape and color of Kumo can tell us a lot about what's happening in the market now and what might happen in the future. If Kumo is thick, it could mean that there's a strong trend going on. Conversely, a thin Kumo can mean the trend is weakening. Or a flat Kumo might mean we're entering a consolidation period. But trust me, interpreting signals from Ichimoku components like Kumo is not as straightforward as it appears. To get a precise understanding of the market, it's important to interpret Kumo signals in conjunction with all the other components of Ichimoku. Moreover, taking into account the long-term structure and context of the market is crucial as it can greatly enhance your ability to make informed trading decisions. Last but certainly not least, we have the chikou span, also known as the lagging span, which completes the Ichimoku family. Many traders tend to overlook this component and sometimes exclude it from their charts. In my opinion, this is a significant mistake. Chikou span is essentially the closing price of the current day, shifted back by 26 periods. It offers valuable information about the current market sentiment compared to the past and can also help confirm the strength of a trend. To put it simply, chikou can visually represent price momentum. If it enters Kumo or current price action, it may indicate the initial signs of a decrease in price volatility. Subsequently, this could lead to a consolidation phase or potential reversal of the primary trend. In this particular example, chikou has remained consistently above and at a reasonable distance from the current price action for an extended period, indicating a strong and healthy uptrend. However, at some point following a pullback, chikou starts moving into the price action, circling around and repeatedly getting pulled into Kumo. This suggests a high likelihood of significant consolidation taking place. Such a scenario can indicate a slowdown in the uptrend and diminishing momentum. Traders should be prepared for a potential reversal and make appropriate decisions based on this information. In the next videos, we will explore more of the hidden gems and unique features that this trading strategy has to offer. Stay tuned.